Hello guys, hope that you're well. Welcome back to another market recap. Yes, don't come at me. It is not New York AM. Don't DM me, don't at me, don't do anything. I have a good reason. So with yesterday, aka Tuesday, we just had a run up, right? And I felt like the Asia session would do something. Like, we've been up the whole day. We didn't really get some retracements, and I literally just I stayed up. But yeah, let me get into this. Let me not smack around. This was the trade. You guys can see. You'll see my trading view trades as well. Just for additional spiciness, you know. But this is my demo. Well, I won't say which trade this was. Okay. Okay, let me get that out. Let's lock into what happened. So with these lows, right? We had these clear lows. We ran up. Okay, we poached most of the highs, right? So this retracement down was such a obvious one. But I was expecting them to do in this run, get the sell side, right? But they left that. So what does that mean? So that means that they are leaving that as engineered sell side liquidity, right? You can see the relative equal lows here, right? And then this low, which should have, pierced the sell side, but it didn't, right? And that is how they made engineered sell side liquidity. So they left that, right? Went up with us taking these highs, right? Which one took it? This fair value gap. So that one is what you want to look at in the rundown, right? So we had these SMTs, right? This SMT, we ran down. Don't just enter, my guy. This is the one you want to look at, right? You can maybe say, oh, inversion fair value gap. Yes, you could have maybe done it, but then you should be break even as soon as it hits this, right? And then as soon as it inverts this and tap this fair value gap again, because that should be an institutional order for entry draw. They tapped it, ran down, so you can take your stop loss to there. If they tap it, then you know, okay, it was not the right time, right? But we came up another SMT. That was for me the one for me, because it's double SMTs. We had higher highs on NQ and lower highs, right? So this high was not poached by ES. This high that didn't poach this high also wasn't poached by this one. So it was actually a downhill. So NAS was up. You can see this like up line, and ES was like this down. So that's also indication that something is cooking. So on this side, right, I marked out a fair value like this fair value gap. We opened down, went up, right? I marked the fair value gap, which was basically a 30-second fair value gap. So don't at me if it wasn't, but I used that. My logic still was there, even though it was not technically a fair value gap. But yeah, not the one that I could view. Okay, I couldn't view that fair value gap. So we stayed bodies, staying in. So as we left, we came back, touched it. As we came down, I entered. We went through. My stop loss was safe. Up here. Only risk $20. Okay. Okay. Came down again. I entered. As soon as we came down, opened and tapped it, I entered. Okay, higher. Came down. As soon as we came below the 50% of this wick, I entered again. Okay, we ran down. Fair value gap. This is the first one in a while. And what did we do? We took the highs. So this is the first value gap after we took the highs, right? This value gap. We tapped it. Institutional order for entry job basically. I entered on consequent encroachment. Ran down. They failed to do the consequent encroachment because they wanted to pair up ES and NAS again for the sell side. So we came back up in, check where the bodies are staying and the wicks are going out, but where are they closing? So we closed here. As soon as we tapped it, close here, I entered. Now, yes. Okay, no, not yes. But check where the entries are and what are we doing afterwards. Are we running? Like, I entered here. That's 3 minutes basically. 4 minutes, 5 minutes. We ran. Enter. 1, 2, 3, 4, 5. Enter again. Sell off. Coincidence? I don't think so. Okay. This is breakaway gap. You don't want to see them come to that. Especially after we, with this one, with this fairly gap. We took this sell side, this, and this with this one fair value gap. So you see the 1, 2, 3 fair value gap. Now that is the one you want to look at. We tapped it, came down, bad entry, but it's okay. Enter again. Where do we close? All the way down here. Not even touching consequent encroachment. Drop. They're edging me the whole time. Partial. Yeah, the spread was insane. Don't at me, okay? Okay. Take profit. I don't know what that pull is. Okay. Don't ask me. Up. Wick. Tapping consequent encroachment just above it. Leaving it. Now after we did all of that, this fairly gap, what did we see? You can see it. We broke these eyes with this fairly gap. What was used? We broke the lows with this fairly gap. What did we use? It's, yeah, buying, selling pressure, guys. Please save your flipping breath. This will be now, because we tapped into this old fair value gap inversion now, we expect this one to be heavy. So we don't want to see them actually retrace into this one, right? Sometimes I do, but we had a nice breakaway and you don't really want to see them go back into that. Drop down. Here drop. I took just a partial there just in case, but I knew we are going for the sell side. And then boop, market maker sell model low, engineer liquidity low, and tap the opening range gap all in one candle and 1 wick. Now that is just a way of saying if you're gonna get a bad sell, you know, your stop loss is gonna be so bad, try and slip you the people that are some big positions or whatever. And that is that market maker sell model. And they started like just time distortion, because that is how Asia session is. Breakaway gap with a fair value gap. Check how we tapped it, left it. Couldn't touch the fair value gap. Only touched that all breakaway gap. Now you want to see them get above this. And if they can do so, get above this fair value gap as well, we can again see a run on our buy side. But isn't that so nice to see, guys? We had opening range gap, we gyrated, not opening range gap, like the closing price of yesterday's regular trading hours, right? Gyrated around it, lower, up, right? We didn't tap it there. And generally, you see them tap this. Especially in a run up, you want to see them touch the opening range gap. They didn't. They left sell side, relative equal lows. I expected it to get it here. They left it again. That is such a big draw on liquidity. You can't miss that, especially with the S&T. That is the best you can ever get. So I don't know, like, what is more? This is the typical best market entry you want. Easy, bread and butter. All of the things were on the table. Everything for drawn liquidity, reason to enter, everything was there. You just had to hold through the few, what was this? I had to hold through what? 40 minutes. 41 minutes. That's the only issue. Or like, not issue, the only obstacle that was here. Technicals was on point. So yes, you want to see them get above that, not respect the lower quadrant if you want to see higher prices. So again, this is not buying and selling pressure. Otherwise, how can all of this align so perfectly? Enjoy the rest of your day. Stay safe. Cheers.